Hello and welcome to PE Value Drivers, conversations about driving value in private equity. Today, I'm joined by Parker Davis from Slate Capital Group. Parker is a partner at Slate Capital, which he joined in 2010. Slate is an independent sponsor, and in his role, Parker focuses on developing new opportunities for Slate and managing its current portfolio. Prior to joining Slate, Parker was a managing director at a private equity fund focused on lower middle market opportunities based in the Mid-Atlantic and Southeast. In that role, Parker was engaged in all aspects of private equity fund management, including portfolio company investment, management, and realization. In addition to private equity investing, Parker has had a successful career in investment banking, having worked at Merrill Lynch in New York for several years. Parker, thank you so much for joining me today. I really appreciate your time, and I know your insights will be valuable to our audience.
Well, thank you, Slade. Really appreciate being here and sharing my thoughts with you and Chief Outsiders today.
Great, thank you. So Parker, maybe to kick us off, you could just tell us a little bit more about Slate Capital and where you guys invest and what your philosophy and approach is.
Sure. Slate Capital Group is a private equity group. We were originally based in Baltimore. We still have a Baltimore office, but we've expanded to Nashville and Cincinnati recently. We are focused on private equity opportunities, primarily control or majority ownership opportunities with regional size companies in the lower middle market. For us, that typically means companies with revenues somewhere between $10 and $200 million and operating cash flow or EBITDA somewhere north of $2.5 or $3 million. We are generally industry agnostic, although we do tend to focus in on companies that have a service component to them, business services, in other words. We do like distribution, light manufacturing. We've got a fair amount of experience in food and beverage as well. We are also somewhat geographically sensitive in the sense that we prefer to be able to have an efficient communication with the company, be able to get there and have a meeting and come home in a day. So travel logistics do matter to us, although we do look at opportunities, broadly speaking, in the eastern half of the United States. Sure. What's important to know about Slate is that we are an independent sponsor. So we don't manage a limited partnership fund, but we do have a stable of investors that we go to that range from wealthy individuals to family offices, all the way to institutions, including private equity and mezzanine investing in our vehicles. And so what we like about that structure is that it allows us to be creative from a structural standpoint, flexible from many standpoints. That might be from a timing standpoint, a tax standpoint, and so timing, whether that means getting into an investment or exiting. We tend to find that model plays well with the owners of the companies that we have a dialogue with, such that we often partner with them on a go-forward basis. In other words, they roll equity into our deals typically. And they like to know that we have the flexibility from a timing standpoint to do what's right with the company and not be influenced by the broader paradigm of a fund so as to maximize the optics for that particular fund to go out and raise another fund. Now there's a world of funds out there, and it's a fine way to go about your business. But at the same time, this is a model that we found to be attractive for us and successful in the grand scheme of things.
Great, makes perfect sense. So you mentioned before, you've had a storied career. You started in investment banking. How'd you get into private equity, and what drew you to it?
Well, I always like the holistic aspect of private equity, meaning that there is deal making involved, and that's probably what I bring to the table relative to my partners in terms of understanding how to approach an opportunity, how to structure it, looking at the financial aspects of it, raising the capital. But I also like the opportunity to get involved and think about the day-to-day management of a company and to enjoy the benefits of ownership. And that can mean the day-to-day benefits of understanding the gyrations of a company throughout its daily, weekly, annual cycles, or it may mean the benefits of having owned a company and likely exiting at some point and enjoying the financial benefits of ownership as well. And so we at Slate complement each other. We have three partners at Slate. We come from different backgrounds. And one partner, Rick Corcoran, is a former consultant, and he brings a lot of operating expertise to the table. Our other partner, Eric Ginsberg, has a legal background, can be very helpful in that respect, but also has a significant amount of experience in private equity investing himself and brings a holistic view to the table as well.
Right. As an investor in private equity, your job is to create value for Slate Capital, for the companies you invest in, and for the folks that are investing alongside you. So how have you seen value creation change over the years?
Yeah, sure. I would say that what's interesting over the course of the last 5 or 10 years, I think we've noticed an advancement of due diligence, if you will, meaning that folks like to get to know the opportunity as best they can early on in the process. And that's not just getting to know the company and what makes it tick. It's getting to know the company's place in the industry, the likelihood of success, and understanding the players and the broader setting of the industry. And oftentimes that means reaching out into your network and accessing experts. And that is something that has changed, I think, in the more recent past is the development of these expert networks that folks like us can tap into, not only to get to know an opportunity before we get into getting further with it for that matter, or before we do the deal, but also as we proceed following the deal, there can be a synergistic relationship there where perhaps we can access those experts on a go-forward basis. Maybe they get involved and maybe they can be advisors on a go-forward basis, become involved in the management of the company, what have you. But being able to tap into a group or set of individuals that have expertise in that particular industry can be extremely helpful as we think strategically. Because we obviously want to be successful with that company in its landscape of players. It also provides us with a thought process and a paradigm that allows us to think about what we want to do with the company. And that might mean making acquisitions, getting to know the players in the industry, or think about who might be the buyers on a go-forward basis down the road. So that's maybe an example of creating value along the way. Clearly, we try to use our own network as well, our own expertise, pattern recognition, and understanding the financial dynamics of private equity investing. But those are some examples.
Great. So you mentioned, a couple of elements there, and I'm curious, how do you tend to think? Because you've got a bunch of levers that you can pull, right? Where does organic growth tend to fit in the scenarios with your portfolio companies? I know every situation is a little different, but.
Sure. Organic growth is obviously helpful and important. What I would say is what is of critical importance to us is stability. Perhaps that's a sign of conservatism. I don't know. But we want to make sure that the company has a solid footing in its industry. And so I think that's particularly important these days when you have so much going on outside of the business world, meaning that we've had COVID play a major role in the US economy and more broadly around the world. And that tends to obfuscate, underlying performance. And so there are some companies we've seen that have been able to capitalize on that environment, and others where it has been negatively affected by that environment. And we need to understand, those effects, and make sure that the company that we're getting involved with isn't seeing volatility that is extraneous to its core business. Or how might we deal with that on a go-forward basis? So the stability is really important to us. And then, as we think about growth, clearly we think about organic growth, but we also think about acquisition growth.
Right.
And we like to grow in both ways. They can both be efficient ways to grow. Organic growth, clearly that starts with the top line and the company's current customers and its opportunity with new customers. That can mean regional growth. So, for instance, one of the companies we work with, O'Donnell Metal Deck, is experiencing very strong top line growth, organic growth, and that's because, to start with, its customers value its proposition. It's getting product to the customers quickly, efficiently, at a reasonable price. But then we've also grown geographically. So we've opened new locations so that we can replicate that model. And we've made a small acquisition there as well, which is added to the top line. But I would say that also starts with, as you might imagine, good management,
Right.
and understanding of the players in the business. And by players, I typically mean customers and vendors. And so, how do you play in between your customers and your vendors such that that each of them values the relationship, and you're able to expand those relationships based on that perception of value.
And since you mentioned management, maybe you can talk a little bit about how do you tend to engage with the management team and the culture of the business?
It's a critically important aspect of our business, private equity in general, I think, is to find that right balance. And we pride ourselves on that balance at Slate, whereby we maintain a fairly consistent cadence of communication, where we'll set up a regular line of communication. Typically, that means a regular call every week or every other week, but again, some regular cadence to allow us to just talk about what's going on. And usually there's something going on. Maybe there's an acquisition we're looking at, opening a new location, as I mentioned. But being able to have that line of communication open, and sometimes there's less to talk about, but it allows us to communicate with the management teams, and for folks to feel included. And so, for instance, with White Distribution Supply, we have a weekly call with the entire management team, which is roughly 8 or 10 folks around the table, where they can give an update as to what they're working on. And that not only helps us, but it also helps them internally, because it's a forum, again, for communication, for problem solving, for best practices, what have you. But at the same time, we at Slate really try hard not to meddle. And that's a word that I think is really important, that we give our CEOs autonomy to run the businesses on a day-to-day basis. We're here to provide feedback and our thoughts. Clearly, the CEO reports to the board, and we'll give them feedback at those times. But it's really important that the CEO has the ability to run the company as they see fit. And that's a very powerful thing, especially when you have the right person running the company.
Sure. And do you ever bring in third-party resources, companies like Chief Outsiders or others,
Sure.
to support?
Oh, absolutely. Having the right toolkit is also critical. And what's important is to maintain that dialogue with folks like Chief Outsiders, such that we know you and where you might be able to maximize your contribution. And so different things come up on different days. Life happens.
Sure.
And so we want to be able to say, this is a great opportunity to call Slade at Chief Outsiders, because we really need some help on the marketing side there. Perhaps they can bring in somebody that can be that can take a seat for a while at the company and help us think about our top line strategy and how to grow organically. And so we are not shy or bashful or even ashamed to call somebody that will know better than we do about how to get something done. And in fact, I think that is a key to success in private equity, is having the humility to broaden your network and not try to be all things to all people, but to access resources that can be helpful, and that in today's day and age are going to be that much more specialized, so that we have a sense as to who to call for what situation.
Perfect. Well, Parker, thank you so much for taking the time to speak with me today. I know your thoughts and insights will be really valuable to our audience, and just really appreciate your time.
Terrific. Well, Slade, it's a pleasure being here. Thank you and Chief Outsiders for having me.
Great.